Here 1992, the Indian stock market is soaring. Investors are making unbelievable profits. Sensex jumps nearly 5 times in a few years. A stockbroker from Mumbai becomes the big bull of Dalal Street. His secret? A financial loophole so powerful that it allowed him to move billions of rupees unnoticed. And then it all collapsed. This is the story of greed, deception, and financial disaster. This is the Harshad Mehta scam. But how did he pull it off? What gaps in the system allowed this to happen? More importantly, what lessons can investors learn from this financial disaster? Let's dive in. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So let's get to the story. Act 1. The rise of the big bull. Born in 1954 in a lower middle class Gujarati family, Harshad Mehta wasn't born into wealth. He moved to Mumbai with big dreams but little money. Started as a cement salesperson, then joined the stock market as a jobber, which is an intermediary for brokers. Eventually founded Grow More Research and Asset Management. Soon, he realized something crucial. The stock market could be manipulated. Now, let us take a look at how we engineered this bull run. So, Harshad Mehta's investment strategy was shockingly simple. Number 1, pick a few undervalued stocks. Number 2, pump money into them, pushing up prices. Number 3, use his media influence to create hype. Number 4, retail investors rush in, further inflating the price. And number 5, sell at the peak, making massive profits. Some of the biggest stocks he manipulated: ACC, which is the Associated Cement Companies, Apollo Tyres, Reliance, Videocon. Between 1988 and 1992, the Sensex surged nearly 500%. Investors were making fortunes overnight. Everyone wanted in. Mehta was now a superstar. Mansions, luxury cars, golf on his terrace. He had it all. Media called him the big bull of Dalal Street. But what no one knew was that the money wasn't real. So now let us get into the Act 2, the currency of deceit, the role of fake bank receipts. To pull off his grand scheme, Mehta needed a continuous flow of money. So the loophole he found: government securities, G-Secs. Banks in India had to invest a portion of their funds in G-Secs. But instead of handling this themselves, banks often relied on brokers like Harshad Mehta. Step 1. Fake bank receipts, BRs. Banks needed proof of transaction in the form of bank receipts, BRs. So Mehta faked these BRs, creating an illusion that funds were being invested in G-Sec. Bank trusted these fake BRs and lent him massive sums. It was the perfect illusion. Instead of investing in G-Secs, Mehta poured the money into stocks. Stock prices soared, investors went crazy. With each rise in stock prices, he took out more loans and repeated the cycle. It was a Ponzi scheme at an unimaginable scale. Now comes the Act 3. Engineering a frenzy, stock market manipulation. So Mehta's playbook, the classic bubble, was: step 1, buy stock in bulk like ACC, Reliance, Videocon. Then step 2, drive up the demand. Retail investors will rush in. Step 3, create the media hype. The big bull knows best, like that. And step 4, sell at peak, make huge profits. The Sensex skyrocketed. Investors thought they were getting rich. The TV news clip will read like: investor Harshad Mehta made my 10,000 rupees into 1 lakh. He's a genius. But in reality, stock prices were completely artificial. Companies were not actually growing. The market was running on fraud, and soon the bubble was about to burst. So here comes Act 4, the scam exposed, the fall of Harshad Mehta. It was April 23, 1992, when journalist Sucheta Dalal from the Times of India gets a tip-off. A public sector bank transferred 500 crore to Harshad Mehta, but there were no government securities backing this transfer. Red flags everywhere. Sucheta dug deeper and found that the entire stock market boom was built on fake transactions. Now, April 23, 1992, headline: the 5,000 crore scam that shook the stock market. So investors panicked, banks demanded Banks demanded their money back. The Sensex crashed nearly 40% in days. Harshad Mehta was arrested. Act 5, the aftermath, a web of complicity. This wasn't just a one-man operation. Number one, where banks were involved. Their lax lending policies and weak verifications made the scam possible. Number two, stock market regulators. SEBI failed to detect or stop the manipulation. Number three, retail investors were also involved because many blindly followed Mehta, inflating the bubble. Number four, government officials. Allegations suffered that some turned a blind eye to the scam. So, 1999, Mehta was released on bail. 2001, arrested again for another fraud case, and December 31, 2001, died in jail at age 47 due to a heart attack. In his old interview, Mehta said, "I didn't break the law. I just found loopholes before others did. So is this genius or fraud?" The debate continues. The lessons investors must learn. So what can you take away from this? Number one, beware of too good to be true returns. If someone promises guaranteed high returns, run the other way. Past success does not equal to future success. The market can be manipulated in the short term, so do your own research. Number three, avoid blindly following stock market gurus. Many investors lost everything by trusting Mehta's hype. So number four, diversify always. A balanced investment portfolio protects you from stock market crashes. And number five, stay informed and question everything. If something feels off, investigate. A simple question exposed a 5,000 crore scam. So what are the final thoughts? This is a scam that changed India forever because the Harshad Mehta scam of 1992 remains one of India's biggest financial frauds. It destroyed thousands of investors but also paved the way for a stronger financial system. The lesson: the stock market is powerful, but only for those who invest wisely, stay informed, and don't chase shortcuts truly win. So, what do you think? Was Harshad Mehta a genius or just a fraud? Let's discuss in the comments. And if you find this video interesting, give it a like, share, and subscribe to our YouTube channel. And if you need professional guidance on your investment and financial decisions, then click on the link in the description to register for a free consultation with one of our certified financial planners. And thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.